When it comes to saving for retirement, it seems like it's a losing battle compared to previous generations. They used to have pension plans where fully funded, you would get a paycheck for the rest of your life. Now, most employers have eliminated those pension plans and it has turned to the modern day 401k plan. The big difference between those, when it came to the pension plans, you were required to put money into those pension plans. Where the 401k, you have the responsibility falls solely on you, meaning if you don't contribute, you are not going to have a retirement plan. Now, even though there are tens of thousands of 401k millionaires, we're going to go ahead and look at the 5 biggest secrets to the 401k millionaires like myself. And of course, number 1 starts by using the 401k. Kind of a really dumb question and something to talk about, but when you look out of 4 out of 10 people, that is right, 40% of people, almost half of people, do not contribute anything to a 401k. Now, if a pension is gone, 401k has no contributions. When you get to retirement age and you're starting to draw Social Security, Social Security is meant to replace 40% of your income. Think of a scenario today where if you're making $100,000, Social Security is going to replace 40,000 of that, which is even, I believe, over the cap of what Social Security pays, which is kind of crazy, meaning that if you don't have any additional income, you are going to go so far down the quality of life, even if you have all your bills paid for, with supplementing Social Security alone. So utilizing that 401k, and again, I'm kind of shocked that 40% of people do not even contribute $1 into that 401k. And then of course, we get into number 2, contributing enough into that 401k. When you start running the numbers, it's kind of interesting to see contributions in a 401k, roughly 15% per Dave Ramsey, is a general guideline that you can use for the 401k. However, a majority of Americans roughly put in about 6%. Those were the numbers from Vanguard, which of course has an incredible amount of 401ks throughout the nation. So if you're thinking 6% with the growth factor in there, you're still going to be far below the curve. Even looking as of today, $60,000 is the average salary of a 30-year-old with a stock market return roughly of 10%. You put bonds in there, you put stocks in there, you put ETFs in there. So let's say you're averaging 8% a year on a $60,000 income at 30 years old. If you contribute $440 per month that you're putting in there, or 5,280%, which is 8.8% of that salary, you will retire a millionaire. That is it. It is the simple math. Now, of course, if you contribute a little bit more, the numbers are going to be a little bit higher. If you're like 40% of Americans and not contributing anything, your number is going to always stay at 0. And again, this is only based on 8.8% of your salary. If you bump that up to that 15% contribution, you're going to be well on $1.5 million or $2 million by the time, if not more, that you do get into retirement. Now, of course, this can change where we're basing it on $60,000. If you're making 80, if you're making 100, let's say you're making 100 plus, or even if you're making the flip side, if you're making 50 or 40, putting in that 15% is going to put you far and above that $1 million status. Now, again, American Surveyed said comfortably going into retirement is $1.24 million is what they're looking to have in those retirement accounts when you do get of retirement age. Now, third one we look at, which is probably one of the best kept secrets, getting free money. That is right, guys. A majority of employers within the United States offer you an employer match, which is literally going to be dollar for dollar match on the contribution. Majority of these plans do offer a 4% match, which means you put in 4%, they give you 4%. Right there gives you an 8% contribution. Now, again, going back to the baby steps, thinking of Dave Ramsey advises if your company matches 4%, you're putting in your 15, they're giving you 4, you're contributing $19. In worst case scenario, you get to retirement and you have a couple $1 million in there, which of course is going to be nice and easy getting into retirement, versus the flip side of that where you get into retirement and you don't have enough money to pay all your bills or pay your debts. I would rather be in fault on the side of having too much saved for retirement versus going in there and not having enough. Now, number 4, this is something that I see all the time. And it is something that puts it into a very, very detrimental side when you think of retirement plans, which is do not touch the funds. When people start accumulating those higher 401k balances, you start seeing the compounding interest. A lot of people take money out of these 401ks. When you think of hardship loans, when you think of first-time home buyers, When you think of the taxes and the penalties, the 10% you have to pay, not including the additional funds that could be there, essentially that you have to pay in fees for your 401k, you're not going to see the compounding. You're not going to see the growth factor. When you look at your 401k, the 401k is meant for retirement. That is it. End of sentence, period. It is meant for your retirement dollars. It is not meant as a short-term loan for debt consolidation because you're not managing your budget correctly, because you're overspending on different things. I have seen people take money for 401k loans from schooling to first-time home buying to debt consolidation to going on vacation to paying for a wedding. This is the money you leave alone. Every single dollar you're taking out of this 401k puts your retirement at jeopardy because, again, you're not going to see the growth and you're not going to see the compounding aspect. And the final one, and probably, again, one of the biggest secrets that we see, don't be afraid to risk your money. Majority of 401k plans have some in stocks, some maybe in ETFs or mutual funds. Some of those are also in bonds. When you're a younger generation, and I'm talking probably 50 or younger, younger generation, don't be afraid and don't get conservative with your 401k money. You're not going to have the ability to grow. If you look at the regular S&P 500 returns, if you look at the S or the VOO, which I absolutely love, you're looking at roughly a 13 to 15% return, where again, we're basing our numbers in this video on 8%. So if you're getting a 10%, 12%, 15% return, again, astronomically putting in 15%, getting a 10% return, you are talking multi-million-dollar upside when you're putting money in there. And of course, if you're putting it into some of those target date funds, take a look at them. Make sure you break down exactly how they're earning, what they're invested in. A lot of target date funds that I see do not outperform just putting money into like a large cap, mid cap, small cap. Even looking at mutual funds or looking at ETFs makes a big difference. Now, of course, there are a couple things to remember that I just want to note when it comes to the 401k. Number one, the investment strategies. Depending again where the money is, it might behoove you where if your company's giving you 4%, you're only putting in that 4% to put the rest of the money in IRAs or brokerage accounts because your company does not offer anything that you really want to invest in. Again, some companies are super limited to the funds that they allow you to have access to, which means you're paying a lot of fees, you're paying a lot of fund fees. It's invested in things that you don't want it to be in. Overall, you're really going to see a big shiftward or downward shift into really being too conservative for your age. 401k money, again, is thinking long-term. If you're 30, 60, 65, 70, you're retiring, you need 30 years and you need 30 years of aggressive growth to really build up and blow this plan. So overall, guys, you have to make sure your nest egg is being built and it's built on a regular basis. Honestly, when you look at 40% of people that are not contributing anything to the 401k, it is kind of crazy. You have to take some risk with this. It is going to be for a longer time that you have of that to have a good upside with that 401k. Let me know in the comments how much you guys are putting into your 401k, and I'll catch you in the next video.